What's going on, everybody? My name is Ryan, and today I'm going to talk about IRS penalties, particularly related to personal tax returns only. I might make another video on business tax returns, but today, just personal taxes, all right? I'm going to be talking about why you shouldn't file your tax returns late, the different penalties associated with filing and paying late, and how to avoid doing this in the future if this has been a problem with you in the past or just this year in particular. The first penalty I'm going to talk about is the failure to file penalty. This penalty is assessed on your tax return if you file your return late. As you know, your tax return is due April 15th or some day around that if the 15th happens to fall on a weekend. But for the purposes of this video, let's just say April 15th. That's when taxes are due. What's also due is an extension. So an extension is due April 15th as well. So if you miss the deadline for filing your extension, then it's too late. But if you did happen to file your extension by April 15th, you have now until October 15th to file your tax return on time. And that's because the extension gives you 6 months to file your taxes. Now, the reason you want to avoid filing your taxes late is because of what's called the failure to file penalty, which is assessed at 5% per month that your taxes are late on your net balance due of your tax return. Now, that's pretty significant, 5% per month. So what that means is you run through your tax return, say you enter your W-2 information, all your income information, then you enter, taxes that were withheld from your paycheck, and then taxes that you paid throughout the year. Let's say you made estimated quarterly payments. Whatever is left, if you still owe money after all those payments, whatever's left, the net tax due, that amount is what you'll be assessed penalties on. Not your entire tax liability, just the net tax due. Pretty significant penalty. It's capped at 25%. That means for every month that you're late, you're incurred 5% penalty. So if you didn't file an extension, let's say you file your tax return on May 15th, that's 1 month late. So you have a 5% penalty there. Or let's say you filed on June 15th rather than May, that's 2 months late. So that's 10% penalties on your net tax due. Now it's capped at 25%, which is not very, it's 5 months. So you might think, okay, after 5 months, it might not matter, right? Well, you're still actually accruing interest on top of this as well. So don't get carried away there. If you realize that you filed your return late or you missed the deadline, please do file it as soon as possible. Now, if you file an extension, that goalpost has moved to October 15th. That means if you file your tax return after extension on November 15th, then you're considered 1 month late at that point. So just keep in mind these deadlines, whether or not you file an extension, it's all very important. Now, the next penalty I want to talk about is called the failure to pay penalty. Now, paying and filing taxes are two different subjects with two separate penalties. Paying your taxes is due April 15th, no matter what, regardless of extension. Because remember, an extension gives you an extended amount of time to file your tax return, but does not give you an extended amount of time to pay your taxes. So paying your taxes always due April 15th. Now, the penalties for paying your taxes late is not nearly as severe as filing late. It's assessed at 0.5% per month that you are late paying. So, and that's also on the net tax due, after your wages, after your taxes withheld from your pay and after your estimated payments and all that, whatever's left at the time of filing your return, that is the penalty, that is the amount that the penalty would be assessed on. And again, there's also interest associated with these penalties as well. And interest is typically at market rate, but let's say for the purpose of this video, it's 6% interest. So the late paying penalty is 0.5% per month, which, if you spread it out to an annual rate, that's 6%, plus let's say a 6% interest, that's a 12% per year penalty essentially for paying your taxes late. Something to keep in mind. Hope that's a huge motivator to get your taxes paid on time. Now there's a few simple ways for you to avoid these penalties, and the first and most simple one is to just file your taxes on time. File it by April 15th and pay your taxes that you owe by April 15th. that can save you a lot of headache and a lot of penalties to accrue. Because, on top of owing taxes and, accruing all these penalties, it's just a huge bummer. So just try to get your stuff together and file and pay your taxes on time. The other obvious thing to avoid the big penalty is to file an extension. Let's say there's no way you can file your taxes on time because you're waiting for other tax documents. Well, pay or file an extension by April 15th will definitely help with the failure to file penalty, which is the more significant penalty. And if you don't know if you're gonna, if you can't file on time, you don't know how much you're gonna owe or if you're gonna owe, it might be worth paying some money by April 15th just to be sure to cushion any outstanding taxes due. Okay, because if you overpay, you're going to be in a refund position, and if you get a refund by the time you file your taxes, there's no penalties due. Okay, and this goes back to the failure to file penalty and the failure to pay penalty. If you file your taxes late and you see that you actually are getting a refund, then there's no penalties to worry about, because as I mentioned, the penalties are only assessed on the net tax due as you file your return. So if you are due a refund, there's actually no penalties. So something to keep in mind there as well. If you find that you can't possibly file your tax return by April 15th, you need to file an extension, please be cognizant and try to pay something to the IRS and to the states at that time as well to reduce your penalties. Another thing that you can do is to just pay your quarterly estimated taxes throughout the year. If you end up, if you end up owing more than $1,000 after all said and done, you're technically required to pay estimated taxes. So if you do that throughout the year, you can dramatically decrease the amount of penalties you get assessed, or you might even be in a refund position and you get no penalties. So just keep that in mind. Work with your tax professional to see if you owe estimated taxes, and if you do, how do you pay those? They should be able to walk you through that pretty easily. I might make a video on how to do that here, but really it's pretty simple, and it's an easy way to avoid these major penalties and interest issues at the time of filing. All right, now the last thing I want to talk about are installment agreements. Installment agreements are essentially payment plans to the IRS. Like, let's say you file your taxes, you owe a butt ton of money, like 50 grand, you can't pay it all up front or pay it all at once, so you get on a payment plan with the IRS to make payments on it. Something to keep in mind that I'm not sure many people know is that even though you're on a payment plan, you're still accruing penalties and interest on the outstanding balance. The penalties and interest you're accruing is the failure to pay penalty, which is that 0.5% per month. Yeah, it still sucks. You're still paying basically 12% interest. If you combine the penalties and interest rates together, it's about 12% that you're paying on this net tax due that you're making payments on. So you're thinking, like, why even bother going on a payment plan then? Because you're still accruing interest. Well, that's a good question, because getting on a payment plan actually allows you to be compliant in the eyes of the IRS. And being compliant helps saves you from other troubles like collections from them. They have the power to garnish your wages or to put a lien on your properties, to seize your property. So getting on a payment plan actually allows you to be compliant, and it doesn't, the IRS won't pursue collection processes on your accounts if you're doing an installment agreement. So something to keep in mind, even though you're making payments, you're still accruing penalties and interest. And I bet a bunch of people did not know that before. All right, so that's all I got for today. I hope you found this video helpful. If you're new here, thank you for giving me your time and attention. Please consider subscribing to my channel and give this video a like. I would really just appreciate that. And I'll see you all next time.
They act like they ain't know. Guess I gotta hit them with an update. Okay. I been getting to it when I'm up late. Hit it when you went the front gate. They act like they ain't know. Hold up. Guess I gotta hit them with the update. Really with it, I ain't got a pump fake. Killer flow and hit them with the one take. Act like they ain't know. Guess I gotta hit them with the update. Okay. I been getting to it.